the battle between wallets, between Uniswap, MetaMask, Coinbase, something else, is so crucial. It stands to define what the face of Web3 will look like. Will it be a unicorn? Will it be a fox? Will it be something else? Matcha Dex Aggregator finds you the best prices in DeFi. Soroban is a developer-friendly, Rust-based smart contracts platform designed for scale and sensibility. More on them later in the show. Hi everyone, welcome to Crypto with Cami, where we go through all the main headlines in crypto and DeFi in the past week in 30 minutes or less. This is the show for the week starting February 26th. So this week was all about markets. Crypto markets continued to rally, with Bitcoin crossing $60,000 and ETH crossing $3,500. Uniswap made a few interesting announcements. Airdrops are coming to Bitcoin, and Robinhood is bridging access to Ethereum L2s. Let's dive into Uniswap's big week. It's been really eventful for Uniswap these past 2 weeks. The foundation proposed to flip the fee switch. It deployed V2 across 6 new chains. They introduced limit orders. They launched a wallet that's a sidebar extension to your browser. They launched uni.eth addresses and a better analytics site. I'll quickly go through all these and tell you why I think the wallet extension is so interesting. Okay, so the most market-moving news was obviously the fee switch. The Uni token surged by 60% after the Uniswap Foundation proposed to distribute a portion of protocol fees to Uni stakers. As a reminder, all trading fees that Uniswap earns goes to the Uniswap protocol. For context, Uniswap made almost $5 million in fees just in the past day. That's crazy. For context, that's second only to Ethereum and more than Bitcoin. So distributing those funds to Uni liquidity providers is a big deal. A snapshot vote is set for March 1st, and there's an on-chain vote scheduled for March 8th. So we'll see what the outcome is for this, but it is a big deal. Obviously, the proposal was welcomed by Uni holders. It's been something that they've repeatedly called for because it would just give more utility to the token beyond just minimal governance. It would instantly make the Uni token more valuable. Now, the reason why Uni presumably, or I should say Uniswap, presumably hasn't done this earlier is the regulatory concern, because distributing revenue or fees like this looks a lot like a stock distributing dividends. But we know how clued in Uniswap is with their lobbying efforts. They have really well-connected investors. So I wonder whether something happened that this is now more palatable. Now on to the next announcement. So Uniswap launched V2 on 6 new chains. A reminder that there's Uni V1, V2, and V3. And so Uniswap's V2 is now live on Arbitrum, Polygon, Optimism Base, Binance Smart Chain, and Avalanche. The idea is that with both V2 and V3 available across all these networks, the idea is that users will have more flexibility to choose which of these platforms is better for their specific use case. So V3 is a version of Uniswap that offers more advanced capabilities for more active liquidity providers with their famous concentrated liquidity model. But V2 offers a more simple LP experience. So unlike V3, pools on V2 cover the entire price range of the pool by default, instead of liquidity providers having to pick specific price ranges. So that reduces the need for more active management and monitoring of liquidity pools. V2 on rollups will potentially allow for cheaper swapping. So Uniswap says that swaps will be averaging under $1 in L2s like Optimism and Arbitrum, compared with about $35 average cost to swap on Ethereum mainnet. There's also the benefit that there's almost no MEV on L2s. So, that's just a simpler, cheaper swapping experience using V2. It's also cheaper to deploy new pools there because, again, V3 offers more options, more, flexibility to optimize capital efficiency. All of those things are good for active traders, but it also comes at a cost. So in general, V2 is just a more simplified, cheaper experience, and now it's available on layer 2s, which means that it's even cheaper. Because Uniswap V2 is usually, it's simpler to use, it's the version that people use to launch new tokens. So I wonder if if the fact that V2 is now available on rollups and layer 2s, I wonder if that will unleash a whole new wave of Ethereum-based meme coins. Okay, then the next announcement that they made, I'm telling you, they were on a roll this past couple of weeks. Okay, so the next announcement they made is that they introduced limit orders. So they said it's the most expansive limit order offering in DeFi. Uniswap users can now place limit orders for any ERC20 token on Ethereum on Uniswap's web app. They leverage on-chain and off-chain liquidity. They have no gas costs and can be placed for any swap size with no minimum requirements. So this is cool, but it does feel like table stakes since many other DEXs have had limit orders for years, including Matcha, 1inch, HyperSwap. Matcha and 1inch use 0x protocol under the hood. So I'm not sure what Uniswap means by being the most expansive. From what I've seen, others also offer the feature for all ERC20 tokens. Matcha has additional features like batch orders. So I really couldn't find the differentiation that Uniswap has in its limit order. So if anyone wants to comment, feel free. And then this other more minor announcement, they are bringing this new analytics page, the Explore tab, which, not much more to say to this than Uniswap now has better analytics for, token prices, liquidity pools, and so on. So, okay, now this is where things get more interesting. Uniswap introduced its Uniswap Extension. So here's what that looks like. Okay, so it's a feature for its non-custodial wallet, which it had launched last year. So this extension makes it so that the wallet lives in your browser sidebar instead of using pop-ups and transaction windows like other popular wallet with browser extensions, namely MetaMask. So they say that with Uniswap Extension, you'll be able to swap, sign transactions, and send or receive crypto anywhere on the web. Everything is right there in your sidebar, exactly where you need it to be. So this is super interesting. I'll get into it a bit more detail in a bit, but now going over the last announcement that they made this week, it's that they are offering users to claim their own subdomain with uni.eth. So users can claim their uni.eth username for free in the Uniswap mobile app to turn their 0x address into a readable name that's supported across Web3. So for example, I'd be able to have camirusso.uni.eth. This is using ENS as infrastructure. So they're supported wherever ENS names are supported. Beyond the username, Uniswap is also allowing users to customize their public profile by choosing an avatar, adding your bio, and linking your social media profiles. So to join the Uniswap Extension waitlist, you have to claim your username in the Uniswap mobile app. So they're really pushing the uni.eth name on their users. But back to why the Uniswap Extension is significant. All right, so backtracking a little bit, there's a slight difference between DEXs and wallets. So DEXs are there to trade and swap tokens, and wallets are used to store digital assets and send and receive these digital assets. The line between the two gets blurry because if you're already sending and receiving and storing tokens in one place, you might as well want to swap there too. And those platforms are offering to swap, like MetaMask introduced their swap feature. And so all of these different platforms are vying to be the place where users store their assets, swap, and just spend the most amount of time in general. When it comes to how users interact with Web3, that happens to be through non-custodial wallets. It's why we've seen that exchanges are rolling out non-custodial wallets. From Uniswap, like we mentioned last year, even Coinbase has its own non-custodial wallets. So exchanges don't want to be just a place where users go to swap tokens. They want to become the home base for users. They want to be the face of Web3. I'm reading Chris Dixon's new book, Read, Write, Own, and it really relates to this. It says that the key concept for Web 1 was the website, which is you read. It's a one-directional relationship. You read from a website. For Web 2, the key concept was the post, which you write and self-publish in social media. In Web 3, though, the key concept is the token, which represents ownership of different digital assets. So if the token is the key concept of Web 3, it makes sense that wallets where users store all their tokens and how they log in, quote unquote, or interact with dApps, that the wallet will be the home base of Web 3. So if Facebook and Google were the faces of the internet for Web 2, whoever wins out in the wallet space, I think, will be the face of Web 3. This is why the battle between wallets, between Uniswap, MetaMask, Coinbase, something else, is so crucial. It stands to define what the face of Web3 will look like. Will it be a unicorn? Will it be a fox? Will it be something else? Uniswap is an important contender to be that. It's the largest DEX, trading about 14 billion in the past 7 days. For context, the second largest DEX, PancakeSwap, did about half that amount. But by no means it's a given that it will win. The obvious competitor here, like I mentioned, is MetaMask. MetaMask is already the main way that people interact with Ethereum and EVM chains, which represents most of DeFi TVL right now. It has 30 million monthly users, which compares with Uniswap's 1 million monthly users. So right now, MetaMask is the largest player in the wallet space. Uniswap probably will want to win over some of those users, or maybe capture the next billion users that come to Web3 by improving on the user experience. Looking at the preview version of the Uniswap wallet, it looks like a better experience than the MetaMask wallet. I mean, just from the previews, because there is a wait list. MetaMask is also a browser extension, but it does rely on pop-ups that get lost, and it's a bit clunky to use with all these, confirmations. And mainly, Uniswap's approach, the main difference, it's that it's a sidebar that persists wherever you are online, which is just very helpful and easier. But also MetaMask could potentially just copy it. So it can be hard to beat out an incumbent, which has issues, but the solution that Uniswap is providing is a little better, but not 100x better. Look at me talking like a VC here. The other interesting piece in all this is Uniswap Sub-domains. So like I mentioned, they're really pushing these uni.eth subdomains. So now if wallets are the face of Web3, then your wallet address becomes your identity. By giving away subdomains to its users, Uniswap wants to be a part of that identity, and it lets you customize your avatar, etc., to that end. I think this is smart from Uniswap to position itself as, again, like the face of Web3, but I think it's good for users to have their own domain. It's not that expensive. It's actually pretty cheap to get your ENS domain. It's like $5 a year. And Uniswap owns uni.eth. So they would own Cami.uni.eth, and if Uniswap one day stops maintaining uni.eth, then all the related domains to that subdomain would go down. To be clear, you wouldn't lose your wallet, just a human readable name related to or linked to that wallet. I think owning your own name in Web3 is incredibly cypherpunk. And so I encourage anyone to just buy their own domain to link to your wallet. It's like owning a website domain, like I own camiruso.com in the Web2 world. So we'll see if Uniswap can become the face of Web3 with its wallet. So far, I'm definitely getting on the wait list. Make your trades go further with Matcha, the DEX aggregator from 0x. Get the best prices on swaps with smart order routing and over 5 million tokens at your fingertips. Tap into more than 120 DEXs at once for the best value in DeFi and trade cross-chain for free across 7 networks. And with Matcha Auto, MEV protection will save you money as your trades settle quicker through private market makers. Trade on Matcha today.
If you haven't already considered building your next smart contract in Rust, you gotta have a look at Soroban. You can migrate your existing Solidity smart contracts over to Soroban, and we'll show you how. You can also get funding for your projects. There's a $100 million adoption fund just to drive the adoption of Soroban, so you can help build the ecosystem and potentially qualify for grant awards up to $150,000. You can visit us now at soroban.stellar.org to learn more.
All right, so now moving on to the other headlines. Like I mentioned, markets were in the spotlight this week. Of course, with Bitcoin pushing past 60K for the first time since November 2021, and Ethereum breaking 3,500. Driving this price rally is surging interest in spot Bitcoin ETFs. So it's pretty impressive, just the level of inflows, the levels of volume. They're breaking any expectations that even the most bullish people had. So 9 funds that launched have accumulated more than 300,000 Bitcoin since January 11th, and that's 1.5% of the total supply of Bitcoin itself. So, that's hugely bullish. Like when people buy ETFs, these funds managing those ETFs have to actually buy the Bitcoin and hold it, which just puts a lot of buying pressure, obviously, on the asset. Daily net inflows are hitting records across the board, with BlackRock's IBIT taking in 520 million just in one day, the second most of any ETF instrument that day. They're all breaking volume records, and so it appears to be very much a Bitcoin-driven rally at this point. And it's not a bull run unless Coinbase breaks. So that happened because of the massive interest in crypto. Coinbase was down, with some customers saying they were seeing $0 balances. And other platforms also experienced downtime, including CoinGecko, Robinhood, and Crypto.com. Now, other tokens surged on news of their own, with the Telegram TON token, TON, rallying after Telegram said it will start distributing its TON token to Telegram channel owners via its ad platform starting March. So channel owners will receive 50% of any revenue that Telegram makes from displaying ads in their channel in the TON token. In airdrop land, airdrops are coming to Bitcoin. Super interesting project. This Ordinals project called Runestones. So Runestones will distribute over 112,000 Runestones to wallets that hold 3 inscriptions or more from any of about 2,000 collections that exist across the ordinal space. So each runestone will then transform into a rune token when the protocol goes live. Reminder that ordinals inscriptions are the equivalent of Ethereum ETFs. They allow for non-financial data to be inscribed on the Bitcoin blockchain, from JPEGs to text to videos. Inscriptions get linked to the individual SAT, the smallest denomination of a Bitcoin. So yeah, super interesting project. And of course, it was just a matter of time before airdrops came to Bitcoin. And now other interesting news, Robinhood partnered with Arbitrum to ease layer 2 access. So they're teaming up, Robinhood and Arbitrum, to simplify access to layer 2 networks by offering Robinhood wallet users the ability to swap tokens through DEXs on Arbitrum. Now there's a real world asset news with Ondo. Ondo is going to use blockchains as middleware to trade traditional securities. What does this mean is that Ondo will issue tokens representing ownership of a security. Unclear exactly which securities, but say a stock or a bond, while the asset itself will be held in traditional custody services. And then the tokens will trade on chain, obviously, but instructions like transfers will be transmitted back to broker dealers and custodians to carry out off-chain. So this is kind of like a on-chain, off-chain hybrid to trade securities. Now, Blast, the very hyped Ethereum layer 2, went live. It was so hyped, in fact, that DGens found a way to start using the L2 ahead of its official mainnet launch. We at the Defiant alerted to this before anyone did. And yeah, at the launch, you were already seeing a bunch of meme coins getting tons of volume. So something to look at. And finally, in the liquid restaking space, Ether.Fi closed a 23 million Series A round as EigenLayer TVL surpassed 9 billion. So we see this sector continues to heat up. And that's it for this week. Please like, subscribe, recommend, leave me a comment. Let me know what you think. Let me know who will win out in the wallet wars. What's your price target for Bitcoin, or anything else that you'd want me to cover next week. And see you then.